Hi, it's Michael Ogechi Abbey with Enterprise Express Tax Service. Today, the topic is itemizations. And the reason why I'm actually bringing this up again, because I do have another video on itemizations, on whether to itemize or not, is because I keep getting asked the same question when a client walks through the door and we're discussing what type of things can lower their tax liabilities. And the topic of itemization always comes up. And so I thought it would be good to discuss this again. And there have been some changes. The One Big Beautiful Act did make some changes, which sort of makes your standard itemization probably a little bit more attractive than your regular type of itemization. So let's go over that a little bit. The IRS gives you two options. You can either choose the standard way, which is where the government, or rather the IRS, is giving you the option to just do a standardization off the bat. So you're not taking any additional itemizations on your Schedule A. The government has already given you an upfront deduction, a standard deduction. That's the term I was looking for. All right, they've given you an upfront standard deduction. Now, when the One Big Beautiful Act came in, that those standard deductions were raised. The limits were raised, which means that off the bat, most people, majority of people, were getting a larger standard deduction than in the past, which meant that, for instance, if you had an AGI, an adjusted gross income of maybe $80,000, and you were either single or married, head of household, or a senior, you're automatically getting a larger standard deduction than was the case in years before. And so the argument is this: if you are getting a standard deduction, which is a lot bigger than it was, maybe there's no reason to itemize. All right, maybe you don't actually need to itemize. You can just go ahead with the standard deduction. And in some cases, I've seen where some people were better off just taking the standard deduction as opposed to going through the hassle of itemizing. All right, so that's the difference between the two. Remember, you've got the two options. You know, the standard deduction, which has gotten a lot higher, excuse me, or you can do your regular itemizations. Now, let's talk a little bit about your regular itemizations. On the 1040, the IRS 1040, one of the schedules that you have is a Schedule A. The Schedule A gives you the ability to itemize. I'll give you an example of a number of the things that you can do. You can itemize, for instance, your mortgage interest. The interest that you pay for your mortgage is typically an itemized item on your Schedule A. Your real estate taxes, that's another item that can be itemized on the Schedule A. Real estate taxes that was paid. Now, bear in mind, this would usually show up on your 1098T, which is the document that your mortgage company sends to you at the end of the tax year, showing how much mortgage interest you paid. On that document, they usually will also tell you how much taxes, real estate taxes that you paid. Your real estate taxes paid is also an itemized item. Usually that impacts your state return more than your federal return. The mortgage interest paid usually impacts your federal return. But we're going into other details. I'm actually just talking about how you can use the Schedule A to do the regular itemization if you're not taking the standard deduction. Okay. Let's go over some other things on your regular Schedule A that can be itemized. Donations. If you gave away goods, clothes, shoes, even a car to either Goodwill or Salvation Army, that is an item that can be itemized on Schedule A. Okay, I'm not going to go over everything that can be itemized on Schedule A because it's quite a bit. But those are the big ones. Those are the main things. Oh, and before I forget, you can also itemize Any medical expenses. Now, the caveat with medical expenses is this. It has to be over 7.5% of your adjusted gross income. All right. So, and that number tends to change. It's changed over the years. It used to be 7%. At some point, it used to be 6. But essentially, what you need to know about the medical expenses, it usually has to be a fairly large amount for it to begin to make any difference. And the most times when I see that this tends to help out people is, when people have large medical expenses that their insurance is not covering all of it. And so they're having to come up with tens of thousands of dollars. Then it starts to make a difference. Now, in those cases, if you're itemizing on your Schedule A, my advice is that you list and document all those expenses so that you can have them ready when you're going to get your taxes done, and show them, of course, to your tax professional, your CPA, or your tax preparer. Another thing there is you can also itemize the mileage that you drive to and fro, or to and from, going to hospitals, paying car parking fees and things like that. So there is quite a lot. The only caveat with the medical area of that is that it has to be quite a bit for it to start to make any difference. The other thing that you can itemize on your Schedule A as well, if you do a lot of work for, say, charity that requires you to drive, but the purposes of that driving has to be for charitable purposes. I'll give you an example. Let's say you belong to a church and you have to go picking up people to and from, and maybe on Sunday mornings, you're the one who's designated to use your car to pick people up and to drop them off. The mileage that's accumulated doing that can be written off as an itemized expense on your Schedule A. Right? So, those are the main things that I know that you can write off on your Schedule A. So it's little wonder, it's not surprising that most people prefer to itemize as opposed to take the standard deduction. And that's because there's so much more that you can itemize on the Schedule A as opposed to just taking the basic standard deduction. But again, this is something that you can talk over with your tax professional, because in my case, dealing with my customers, I do know that some of my customers just prefer taking the standard deduction, especially now that it's a lot more than it used to be. And sometimes it's just because they don't have that much to itemize. And so why not take the standard deduction that's actually giving them more of a deduction than the minimal itemization items that they have. All right. So again, you have two choices. You can take the standard deduction. The point to note there is that the standard deduction has increased, especially with the One Big Beautiful Act, or you can choose to do your regular itemization using the Schedule E, which is part of the Form 1040. Right. Once again, this is Michael Ogechi-Abbey. I'm just giving you updates. Remember, I have talked about this before, but I'm just giving a little bit more nuance to it, just because, we do get a lot of questions about this, and people asking us, what do we think? What should they do? And we have to explain it just the way that I explained it to you guys now. If you did like this video, please click on the like button and, subscribe to the channel, because all this great information, you might be losing out if you don't subscribe to it. Click on the alarm bells there so that once we put something out, you will be notified. Okay. We do taxes in all 50 states. All 50 states we do taxes, even though we're based in the Washington, D.C. DMV area in Bowie, Maryland. We offer services in-house. You can come into our offices, or we can do everything online. Once again, Michael Ogechi-Abbey with Enterprise Express Tax Service. Bye.